Hey traders, welcome back to the weekly Forex Forecast. Last week was a huge week in the markets. Why? Because we had the US presidential election. And as we can see, we had a big gap up and a rally in the US dollar after the election results were announced. Why? Because Donald Trump won the election outright, and now he's going to look to implement both corporation tax cuts and also implement tariffs. Now, both of those are inflationary, and we're looking at a scenario where we have stimulus on the fiscal side and also stimulus on the monetary policy side, because not only will Trump be doing that, but the Federal Reserve are beginning a cutting cycle. And when you put those two things together and focus on the fact that we're currently sitting at 3.2% roughly core inflation in the US, the markets are concerned about a re-acceleration of inflation. And this is why we're seeing the US dollar strengthening. And US dollar strength, US dollar long setups are one of the top things we're going to be looking at in today's video, and one of the top themes on my watch list for next week. Okay, so moving on to the portfolio selection for next week, and the first thing to note is the Australian dollar sits right at the top of the pile. Not surprising, because if the markets are concerned about a re-acceleration of inflation, we should see positioning into the Australian dollar, a commodity currency which benefits from inflation. And at the same time, we should see the EU majors underperforming: the pound, the euro, the Swiss franc. The other currency that benefits from a more kind of inflationary regime or a re-acceleration of inflation is the dollar. So although we are sort of seeing the dollar kind of bullish to neutral, getting a little bit weaker in the performance metrics, we have that bullish catalyst from last week, and I'm looking for follow through into this week. I do think we could see the US dollar starting to outperform in the performance metrics over the next few weeks. So if we're looking at Aussie dollar to the upside, US dollar to the upside, what's the third currency we can look at? Either the pound or the Japanese yen. Now, interestingly, in periods previously where we've seen the dollar outperforming, the yen has suffered. The money's been coming out of the yen, going into the dollar. This time, what we're seeing is as I said, that kind of inflationary setup where the yen, yes, is likely to, lose some ground to the dollar if the dollar starts picking up. But we're seeing money coming out of the EU majors. We're seeing primarily the euro, the Swiss franc, even the pound is likely to start to suffer as the US dollar gets stronger. So we're seeing a little bit of a shift as the US dollar starts to outperform. Yes, we should expect the Japanese yen to suffer from that, but it really is the EU majors, at least heading into next week, that I think we should pay attention to in terms of shorting. So going to be looking at Aussie dollar to the upside, the Japanese yen to the upside, and I'm also going to be looking at the US dollar instead of the pound because of that bullish catalyst with the election last week for the dollar. And to the downside then, so looking to be long those currencies versus the Canadian dollar, number one. We can look at the New Zealand dollar. I mean, you could look at, New Zealand dollar to the downside, but going into next week, I prefer, as I said, those EU majors. So we're going to be looking at Swiss franc shorts, and we're also going to be looking at euro shorts. So I'm going to be looking at AussieCad to the upside. We're going to be looking at Aussie franc to the upside, Euro Aussie to the downside. We're also going to look at CAD yen to the downside, franc yen to the downside, euro yen to the downside in today's video. And we're also going to look at euro dollar to the downside, US dollar Swiss franc to the upside, and US dollar CAD to the upside, as yes, we're getting inflation, but crude oil is not quite catching up with that inflation regime yet. We're not getting inflation because of crude oil, we're getting it because of the fiscal and the monetary policy. So crude oil is still underperforming, even though we're getting a more inflationary setup. And as a result, the Canadian dollar is suffering because of that. Kicking off the watch list then, as we do every single week with crude oil. Now, crude oil, I've zoomed out a little bit here. You can see we came down and then we started to chop around, and really we're ranging currently near term in crude oil. On balance, I would rather look for shorts over longs, and in every market we look at, I'm always taking a set directional bias. I can't be long and short a market in the same week. I can only be long the market or short the market, filtering out the opposite type of opportunity. So in this case, I can only be short crude oil going into next week. And what that means is we're looking on the 4-hour chart here. I'd like to see this market pushing higher, taking out its upper bound, the 73.78. This is the automatically generated projected range in the Hedge quantitative analytics platform. And when it takes that out next week, what it means is that the market is overbought with roughly a 70% expectancy next week. Now that means once we trade above here and we become overbought during the week, we have very high odds of pausing or reversing, especially for 1 or 2 days. So if we breach the 73.78 next week, that's where I'm going to be dropping down. And I do this in real time with GMT members every week. That's where I'll be dropping down to the lower time frames, looking once we turn overbought for crude oil to start to run out of steam, lack momentum, show, head and shoulders, double top on the 1 hour, the 15 minutes, the 5 minutes, using those intra-day charts for timing the entry. That's where I'll be dropping down, looking for a 1 or 2 day reversal as longs liquidate, and then you get the capitulation in the other direction. The second thing I'll be looking for then next week is if we blast through there and take out the 77.13, that's where we become extremely overbought intra-week. Now, usually when that happens, if I'm looking at a market, I might already be short. And then it moves to here, and I'm just cost averaging a losing position. And as it pulls back, I usually cut those. Now, again, that's exactly the technique we employ in real time with members throughout the week. So if we break through here, I may already be short, but whether I'm short or not, above the 77.13 is the second place next week. I'll be looking for a potential 1 or 2 day reversal to the downside. And the third thing you can look for is look for that kind of intra-week bear flag opportunity in this case, where the market starts to make its way back towards the level. It then breaches the moving average. You see it break, it pulls back into it, very much like over here. Breaks it, pulls back into it, and then it starts to move away. You get that nice bear flag. So you can look for that. If you get a fast market to the downside, which is weak enough that it doesn't take out its upper bound, and you start to get the momentum back down below the moving average, look for it to pull into the moving average, and you can look for that bear flag setup down to the 67.07. That's the profit taking target to the downside. Probably takes out this low as well if it does take out this level. Okay, kicking off the watch list then with AussieCAD, which is one of my favorite pairs going into next week because we've got the Australian dollar benefiting from a more kind of inflationary outlook, but the Canadian dollar, which should benefit from an inflationary outlook if crude oil is going up, is seeing a weaker crude oil price, and therefore it's suffering. So going into next week, I do like this market to the upside. What I want to see is I want to see this ideally come down, breach the 0.90698. Now, if we breach this level, we turn oversold intra-week in a market that I want to be long or looking for buying opportunities. I'm going to be dropping down below this level to start to look for reversal patterns for a 1 or 2 day reversal to the upside. If we blast through here as a plan B and we end up taking out and breaching the 0.8972, that's where we become extremely oversold intra-week. And whether I'm long from here or not, this is the second place I'll be looking for a potential 1 or 2 day reversal. And the third thing you can look for is for the moving average to track down. And then, of course, before taking out the lower bound, you get momentum to the upside. The moving average tracks back around like this, and then you get that kind of bull flag set up into, in this case, the upper bound at the 0.9263. And also, you have a nice prior high over here as well for confluence. Next is Aussie Franc. Now, I've moved this across the screen a little bit just so you can see the steep move coming in and how we've gone into a range. So we're sort of ranging Aussie Franc. However, I'm only primarily interested in long positions, as again, we've got that play of an inflationary currency with the Australian dollar, and then of course the EU majors tend to underperform in an inflationary regime. So in terms of Aussie Franc, what I'd like to see next week is I'd like to see this market come back down, breach the 0.5684. That is the level next week that if we start to trade below that, we become oversold intra-week, especially if we come down, take out this low. That would be great, because then we turn oversold and then we run into support. So now you've got two reasons why Aussie Franc could start to form inverse head and shoulders, double bottoms, reversal patterns for a 1 or 2 day rally. That's what I'm going to be looking for next week. If we breach this for whatever reason, as unexpected as it is, and we take out the 0.5602, we become extremely oversold intra-week. And this is the second place. Below here, I'd be looking for a 1 or 2 day reversal, whether I'm long already or not. And you can see a nice low over here. So again, if we do come down, I mean, especially if we come down and we breach the second lower bound, which is not expected to happen. Usually that has an expectancy of happening about 5% of the time. So it's not expected, but sometimes it does do that, especially with any, catalysts, known or unknown. So if we come down, we take this out, we do have a really nice support here. This would be a great place to look for a bounce to the upside for 1 or 2 days. And the third thing, of course, is look for that bull flag set up intra-week. We come down. Maybe we just breach down below the moving average a little bit, and then we rally strongly again, and you see the moving average turning up, and you get that opportunity to look for the breakout and the rally into the 0.58479. If we breach that, we could very easily take out the high, But once we breach that and take out the high, it's pretty much most likely all that we're going to get out of this market to the upside next week. And the final Aussie pair is EurAusd. I can either be short this market next week or do nothing. I cannot buy this market next week under any circumstances. So if this market pulls back, and I really like the fact we've got nice momentum to the downside, I do think we're probably going to come down, start making our way back down towards the lows. So if we start to pull back, what I'd like to see is, I would ideally like to see this breach the 1.6465, and these levels are specifically for next week. Once we finish the week, you know, these will reset. But if we breach the 1.6465, we become overbought intra-week in a market that I'm looking for shorts. That's where I'll be looking for a 1 or 2 day reversal to the downside in real time next week with members. And if we blast through here and we take out the 1.6649, this is where we become extremely overbought intra-week. That would be indicative of a bigger trend change because we'd break this and we'd be making new highs. So we'd probably be looking at pulling back, and then next week I'd probably be switching to be a buyer of this. So as unexpected as that is the plan B above 1.6649. Whether I'm short already or not, I'll be looking for a potential opportunity to the downside if we get there, which is generally unlikely. And the third and final thing, and you may, especially as we've got strong momentum, you could very easily see EurAusd pulling back to the moving average, failing to make it up here, and instead breaking back down below it. And if you get that, look for that bear flag setup. Basically just a big correction breakout. Look for that down to, in this case, really nice profit taking target of the 1.6098. Once you start to trade below that, your odds of continuing drop to about 30% to go much lower than that. So that's a great place to start to book profits on any intra-week shorts. Moving on then to the US dollar pairs, or specifically that US dollar long theme that I'm going to be looking at trading next week. Something to note is we do have US CPI coming out on Wednesday. So there is a chance that the dollar pairs and actually Forex in general is kind of choppy into Wednesday, and then we start to get volatility from Wednesday onwards. So just something to bear in mind if you are looking at trading the Forex markets next week. You know, preferably for me, I would like to be in and out before US CPI on Wednesday. And then after CPI comes out, you know, start looking again. Because if you're holding markets through CPI, you get a lot of volatility. You can be on the wrong side of bigger moves, especially if you're short-term trading. So what I'm going to be looking for next week, probably, you know, before CPI and then after CPI, can we get US dollar CAD pulling back, breaching the 1.3750? If we do that, we become oversold intra-week in a market that I'm really looking only for buying opportunities. This is where I would start to look for a 1 or 2 day reversal to the upside. Very, very unexpected that this would happen. You'd have to have a major catalyst, a major bearish catalyst for the dollar. I don't see it happening, but if we do, just as a plan B, break through here and make our way all the way down to the 1.3591 and breach this, we become extremely oversold intra-week, and the odds dramatically increase for us to reverse to the upside for 1 or 2 days. So that's the second place below the 1.3591. I'd be looking for a potential long setup, whether I'm long already or not. And finally, you can see we could just continue to correct. And if you get that break back above the moving average with momentum, you won't see it break. You know, you want it to trade above there and be clear. You break above the moving average turns, look for it to pull back, test, or hug the moving average, and you get that kind of bull flag set up. In this case, great profit taking target to the upside is the 1.4067. Next is US dollar Swiss franc. You know, a nice inflationary setup again. The US dollar benefits from reacceleration inflation because yields go up and the EU majors tend to suffer. So any pullback in this, and I'll be looking for some follow through, you know, after the rally on the election, but any pullback, ideally what would be great, if we could come down and breach the 0.8659, we become oversold intra-week. We would also be retesting this kind of double bottom breakout right here, this confirmation, because we kind of double bottom, then we break. So if we come down, we test the 0.8659 and specifically retest the double bottom breakout point, this would be a great place to look for a 1 or 2 day bounce to the upside in US dollar Swiss franc. If for whatever reason, as unexpected as it is, we breach the 0.8562, that is the second place I'd be looking for a 1 or 2 day reversal to the upside next week, whether I'm long already or not. Third thing though, we may pull back, and instead of breaching the lower bound, we may reaccelerate back above the moving average, and you can look for that bull flag setup next week. Usually you only get one bull flag setup in the 4 hours in a given week, so you can look for that next week to the upside. The 0.8853 is the profit taking target to the upside in US dollar franc next week. Next is euro dollar. I can either be short or do nothing. I cannot buy this market next week. Really nice sell-off post-election, so don't be surprised to see this go to the downside intra-week. What I would prefer to see, as always though, is it to breach back above the 1.09017. If it does that, it's probably going to take out this high. If it does that, we now turn overbought intra-week in a market I'm looking to overall be short, and we're trading into resistance. So that would be a great place. I would definitely be looking for a 1 or 2 day reversal to the downside next week if this transpires. If we blast through here, very, very unexpected. I don't think this will happen, but if it does, on the off chance we get some kind of very extreme bearish catalyst for the dollar, the 1.1084 is where we become extremely overbought intra-week. So second place, whether I'm short or not, I'll be looking for a 1 or 2 day reversal. The third thing, as always, is we may just consolidate, we may range, and you can look for that kind of pullback, preferably above the moving average, and then a break back down below it. That sets up your kind of bear flag. You get that momentum, comes back in, hugs the moving average, and you can look for that short down to, in this case, profit taking target to the downside is the 1.0536. Wrapping up the Forex universe then with the Japanese yen long theme. Now, to be clear, I much prefer Aussie dollar longs next week and also US dollar longs next week because they both outperform inflation regimes. The yen tends to actually underperform a little bit, generally speaking. However, on a relative basis, as the third and final theme this week, Japanese yen strength is something I'll be looking at, but I just favor the other setups that we've already looked at. So I can either be short or do nothing in this market. Buying this is not an option. So what I want to see is I want to see this push higher again, breach the 111.51. This is where we become overbought intra-week, and this is all, by the looks of it, just one move, ready to break to the downside at some point, but we're still kind of pushing higher. You can see it's also corrected because it's choppy. Every time it tests the high, it kind of chops. Tests the high, chops. That's indicative of a correction as opposed to a trend, which is more impulsive, or, you know, those kind of impulse waves, which are more steep. So breaking above the 111.51 is where I'll start to look for a potential 1 or 2 day reversal to the downside next week. If we blast through there, whether I'm short from here or not, and we take out the 11331, it's the second place, I'll be looking for a 1 or 2 day reversal to the downside. Why? Because we become extremely overbought intra-week. And the third and final thing, of course, is we may just push higher, and then instead of taking out the upper bound, we come back down, breach the moving average with strength, pull back, hug it, and then you can look for that bear flag setup. In this case, nice profit taking target at the 107.92 and probably this support area down here, this low. Next is franc yen. Again, I can either short this or do nothing. Buying this is not an option. We've started to break out. You can see a consolidation here, and we started to break down below it. So we may not actually come back and retest the upper bound, but we never know. We're being reactive. We're looking to see if these setups transpire, and then we're reactively taking them, because that's going to put you in much better stead than trying to predict everything, which, you know, is very, very difficult to do. None of us can actually predict the future. So we want to have these setups, we want to war game them, and then when we see them developing in the markets in real time, then we can actually execute on them. So what I'd like to see is, ideally, I'd like to see this come back up, breach the 176.53. We have multiple highs here. We may even breach all the way up and take out the prior high over here. If we do that, this is going to be a great place to start to look. Do we start to lack momentum? Do we get a double top or a head and shoulders on the 1 hour, the 15 minutes? If we do, that's where I'm going to be looking at initiating a short for a 1 or 2 day reversal. If we blast through here, unexpected as it is, and take out the 178.78, we become extremely overbought in this market next week. I'll be looking for a 1 or 2 day reversal. And the third and final thing, again, you may just kind of bear flag, pull back, especially as we've already breached here. You know, pulls back, breaks above the moving average, stair steps maybe these lows, and then breaks back down below the moving average. The moving average follows it. You can look for that bear flag setup into the lower bound, in this case, the 172.03. And the final yen pair is euro yen. Now, very similar to what we just looked at in franc yen, we've already got a momentum break right at the end of last week. When you get that, it does mean that you're probably going to start to, you know, make your way down intra-week with a kind of more of a fast market, because you've already got the momentum in the breakout. If it does pull all the way back and breach the 166.06 reactively, you know, we take out this high or this high, I'm going to start to look for momentum to fade at either of these highs, look for the reversal pattern for a 1 or 2 day reversal to the downside. If we blast through here, the plan B, whether I'm short or not, I'm going to be looking at the 168.52. So we trade above there, we become extremely overbought intra-week. I would be looking for a 1 or 2 day reversal from above that level as well. And the third and final thing, which is maybe more likely in this market, is the moving average comes down, we pull back, we actually stair step the prior breakout low over here, and then as we stair step that, we reject from it, we sell off, and you can look for that kind of bear flag setup into, in this case, the lower bound. Really nice key area of support down here as well, into the lower bound at the 161.15. That is a great profit taking target to the downside next week. Once you trade through there, the odds of continuing are diminished. Okay, so wrapping up the video with gold and silver, as always. Last week I was actually looking to be a buyer of both gold and silver, and this was a market that I did trade in real time with GMT members, and I bought this as it traded into its lower bound. Now look at this reversal, look at this bounce. We had this kind of weak candle, and then we got the follow through to the upside. This was one of the real time setups I posted last week, and this is what I'm looking for again. If we trade above or below upper or lower bounds, this kind of reversal, that is really what I'm looking for when I say to you I'm looking for a 1 or 2 day reversal. Coming into this week, however, we saw with the big sell-off on the election, the effect a stronger dollar is having on gold and silver. Now, they're not super bearish. I don't think they are fantastic shorts. I actually like the Aussie dollar long and US dollar long themes better next week than shorting gold and silver. You know, shorting gold and silver is kind of a US dollar long theme. But on balance, I would be preferring to look for shorts in these markets next week because of that headwind of the US dollar. So any pullback in gold, if we start to breach the 2749.41 and take out these highs, this is where maybe we even pop through, take out this high. This is where I'd be looking for a 1 or 2 day reversal to the downside in gold next week. If we blast through here and take out the 2814.62, this would actually be a continuation of the overall trend, and this was where we'd become extremely overbought intra-week. If I was already short from here, I'd be looking to cost average from the second upper bound at the 2814.62. And the third and final thing is you may not even make it up here. If we get a stronger dollar pretty much out the gate, you can look for that correction above the moving average, but then gold breaking back down below it. The bear flag setup where it pulls back, kind of hugs the moving average, then sells off into, in this case, the lower bound for next week at the 2618.98. And finally, we have silver, also a short or do nothing for me next week because of that bullish bias in the US dollar. Any pullback again, I would be looking for this to breach the 32.88. Silver is a very volatile market, so if you haven't got the stomach for the volatility or you're not used to trading very volatile markets, you might want to allocate into gold instead of silver. It's a bit more forgiving. However, if we breach the 32.88 and we take out these highs especially, also we could stair step this. That would be good because we came down, we failed to make high, we breached it. If we pull back, we turn overbought above the 32.88 and stair step this low, this is where it could start to look, and I'll be looking for momentum to fade for a 1 or 2 day reversal. If we blast all the way through here, take out the 34.46 and probably start taking out these highs, this is the second place I'd be looking for a 1 or 2 day reversal to the downside, whether I'm short or not, although it's not expected to take out the upper bound here, the gold one. It's just a kind of backup, a plan B. And the third thing, as always, you can look for the correction A, B, C above the moving average, and then you get the sell-off, which essentially is a one-way, and then you pull back into the moving average, and that's where you get that bear flag set up. In this case, the profit taking target to the downside for next week in silver is the 29.72. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.